In this video, I'm going to cover what the Scanify tool does and the ASX Stock Analyzer tool. We're going to go through how to identify stocks that might be worth looking into, how to find their report from the official website, and then how to actually analyze and what comes out once you do that analysis. Once you log in via this button, you'll go to your dashboard, and as you can see, there's the dashboard. You've got a couple of tools here. So you've got the Scanify ASX Stock Scanner and the ASX Stock Analyzer. What you start off with is the scan. So you want to scan the market and assess what's actually going on. So you click either the picture or the link, and that takes you to this tool here. You can search by sector, industry groups. You can change the price range that you want to search for, the intrinsic value range, which we'll discuss later in the video, and the dividend yield range as well. So if you're particularly a dividend stock enthusiast, you may be interested in this slider here. Let's say you want to have a really high dividend of at least 10%. It'll pull the stocks that are pulling that sort of a dividend yield, obviously being careful of the dividend traps. You'll see all the data here. So you've got stock, last price, dividend yield, intrinsic value, which we'll talk about in a second. Now the price to intrinsic percentage, so that's the percentage move required to go from the last price to the intrinsic value. You've got the earnings per share, net income of the company, debt to equity ratio, net debt, cash per share, tangible book value, and then you've also got the industry group, economic sector, and how many shares they have. So to make it easy, we've also got the Activate Super Scan. Now that takes out a lot of stocks that don't hit certain markers for us. So if I just press that, it will filter all of these stocks. Now I'm going to click price to intrinsic, and we've seen we'll bring the highest percentage change to the top, and that's KSL. So we're going to research this top one that's come through. Now all this data that I've got here is from January. So this data here, it's not current, it's actually from January. When you log in and get your own tool, it will be the current data, but I'm using an old example so that you can see what has happened over the past 6 months thereabouts and explore what the outcome is over a longer term, because this is looking at more fundamental information, which brings us to the intrinsic value. The intrinsic value is a calculation based on the actual earnings potential of the company. It takes into account future value, the earnings per share, the total income. It also looks at the tangible book value, the book value per share, which is essentially a lot of the assets. For example, that's $1.80 compared to $1.22, so that's a good thing as well. So you want the tangible book value in many cases to be either higher than the current price or somewhat close to. It just helps to protect the asset value. Once you've picked a stock, obviously you would probably search through, you would pick a sector, that kind of thing, but let's just pick the very first one from 6 months ago. So at that time it was $1.22, and this was around January. So I'm going to go now to the ASX website. You've got Kina Securities Limited, KSL. The last price was $1.29.5. So looking at the chart, it was somewhere, it was $1.22. So it was kind of at the peak in January. So it was somewhere around here. As you can see, there was a dividend that pushed the price lower for a short period, and now we're trading at $1.30 or $1.29. It has moved up. There has been a dividend in that period as well. And what we're going to do, so we check the price just to see where it's at on a chart so you can get a feel for how the price flows. What you can do then is scroll down. You'll go to KSL announcements and then see all announcements. What you want to do is go and find the most recent annual report. So the annual reports generally contain things like a profit and loss statement, a balance sheet, and a range of other core information to that company that then the ASX Stock Analyzer can actually investigate further. So you download that statement. This is it here. So it's got 143 pages of content. That will be a lot of financial information, who the directors are. So you save that and then you go choose PDF. You click the report that you've saved and then you just hit Analyze Report. Now as that runs, it's basically assessing every page of that document, figuring out the profit and loss, defining the key drivers for this stock as well as the pros and cons, turning jargon into simplified information that people can easily understand. Now, the point of that is not to make an investment decision, but to help you quickly figure out whether this stock is worth more of a look. So once you've quickly scanned, you can go through, find your preferred stock in sector, value, dividends, all of that. You then go to the ASX Stock Analyzer, get a quick analysis made up from the AI tool, and then it will tell you the pros and cons. You can also pull out an image, a PDF, or a Instagram style image that you can then share if you choose to, or you can save it for your own records as well. And then from there, you can make an easier decision as to whether you want to spend time researching the stock in detail, or if there's too many risks that you don't want to take on, or the value isn't there. This is a very quick way to figure out if a stock is worth looking into more, or if it's something you want to move on from and find a better selection. So from an investment banking perspective, it's about figuring out all of your options on the table, going through figuring out what the best opportunity that you can invest in right now is. And this helps filter through quite a range of stocks. You could do this for 5 or 10 stocks that you pick out or more, and then go through and pick the best one out of the further research that you do. So once this is all complete, it does take a little while because it's going through 143 pages. Now, if you used ChatGPT or another tool, it's probably not going to be able to go through the entire document. It might only go through, say, 40 or 50 pages max, or it'll be quite sparse. So it's about using this tool to go through the entire document. It's quite structured in the way it looks through the document, and looking for particular issues, particular things that stock investors want to look for and are particularly interested in. So you're getting an investment-focused report at the end of it. While that's running, I just want to point out the ASX for this year. So what we're looking at, so from January, around this range here, so from this price point, the market has actually moved down. So it moved down quite a bit here, and that probably lines up with that dividend period from this stock that we're researching. But you'll also note that the price has in fact declined as an index. So the top 200 stocks have actually declined overall through this period. And you'll note that the intrinsic value pointed out that this stock is intrinsically higher in value than its current price at the time. And the stock has moved up instead of down. And that's a very good result considering that the majority of the market has in fact gone down. So you'll see that many stocks, even if they did have a good intrinsic value, they may have been pulled down by the market in general. And that's why this tool is quite good, because it's actually looking at the business factor of the stocks. It's not necessarily just looking purely at the price itself. It's not a technical indicator. It's very fundamental in terms of cash flows and future value and that kind of thing. So the index has moved down. We're still just waiting on that report, so it can take some time because it really goes deep into scoring the opportunities and the risks. It's going through the cash flows, and it's putting together the investor summary so that we can review it. We can see now the report has been completed and the report is ready. Down here we've got a brief overview of the moderate risk score that's been given, so 58 out of 100, and it shows that it's analysed 143 pages. There were 14 low text pages. You can switch between simple view and investor view, and you can download the report for either one, and you can download a poster as well. So if you want to upload this to Instagram or Facebook, or you're in a social media group, you can do that as well. I'll just quickly go over what is included when you run a report, and this will change depending on the report itself, what it's actually got inside it. So you've got the executive summary here. It explains some of the core information for this report that we've put through, along with dates and source pages, so that you can go check out the validity of that from the actual report itself, just in case something doesn't look correct or you want to verify the context around that information. Down here you've also got the top 5 price drivers. So you've got 1, 2, 3, 4, 5. It basically takes out the core 5 drivers of what you want to be looking at in particular. This one is talking about return on equity was 17% for this period, and it talks about a lot about the net profit as well, which is an important part of the price drivers. We'll continue on. There's a currency note here. So it's the Toea, apologies if I get that wrong, is Papua New Guinea's equivalent of cents. So there's just information on the currency that's being used here because this is listed in Australia, but it is a Papua New Guinea based company. We've got the financial snapshot. So we've got a whole heap of data here, including the NPAT, operating income before impairment losses, cost to income ratio, and it also gives you the source page of where it finds this data as well. Scrolling down now, you've got the opportunities and risks. It goes through a range of opportunities that the AI spotted and pulled out from this report, along with a range of risks. It's got a few risks here, so liquidity risk management policy. So there was obviously a change to that of some sort, and you can see the source here if you want to go investigate that further and why that's come up as a risk. Perhaps it's just simply tied to risk management policy. So it's important to observe what changes were made, particularly because of the nature of this company. Scrolling down, we've got cash flow and debt, so it pulls out a range of points that could be quite important to you. Segment performance, so we're basically comparing the two different years. Obviously, it's pulled this out as two major segments of the business. So you've got banking, finance, and then its wealth management arm, and it's comparing the two. So current year versus last year. So you can see the difference in both income segments there. Quality of earnings covers the free cash flow versus EBITDA. It's got low confidence here, so it didn't really seem to pull up too much. It's got credit loss provisioning and recurring revenue quality, high confidence. So it's got information that pertains to the quality of earnings. If you want recurring revenue and you want to investigate that further, you can go to page 5 of the report and just look into that a little bit further. So it's not just pulling the core information, it's also referencing where it's got that information, so you can go and dive a little deeper if you find that it's a concern or it's something you really want to explore further in the report itself. You've got financial health down here as well. So you've got credit quality, cost efficiency, cash runway. This describes why it's not that important, but it's just a different way of looking at the cash runway. So it's a bit different to normal businesses, thus not applicable. You've got guidance analysis, so you've got management outlook, and it basically goes through and explores the different outlook that management have. So often management will say, look, we're expecting a better year or a worse year. You've got a range of details here based on what the management think and the pages that go alongside that as well. It also brings up a medium confidence to the management tone. And here's all the pages where it's analysed that management tone. But in particular, these 4 above here are the predominant management outlook information from the report. We've got a bit of a report assessment here. So we've got audit and governance seems quite strong with a 100 score there. Capital strength is 50. It obviously didn't get too much on the cash flow context or quality, so whether that's a poor score or it just didn't get the information. So those are both 0. You've got credit quality, because it's a bank, you would hope that's quite strong. Earnings and efficiency is 67, so that's okay. And then management outlook are quite strong as well. So is that the managers just simply being quite positive with other things lacking? That's just something to look into further. Risk watch points, so it also comes up with a range of risk issues. So you've got credit impairments to take note of. You've got low and medium scoring for most of it. There's no high risk ones here that come to light, and you've also got the source page. If something looks like it's going to cause an issue, you can go and check that out in more detail. So that's the entire report. You can export that. You can obviously make notes on your own document there if you want to keep that, or you can even copy the report as well and paste it if you've got some sort of software where you'll drop that in.